The S&P has now struggled for several weeks. How long will this pullback last? We go over the markets up to March 30th, 2019. This is Agustin Hernandez. Before we begin, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on the examination of past price movements and cannot predict the future. Technical charts referenced are subjective. No strategy can ensure success or protect against loss. International markets involve special risks such as currency fluctuation and political instability. These risks are often heightened for investments in emerging markets. International investing may not be suitable for all investors. Investing involves risk, including loss of principal. Sector investing will be subject to greater volatility than investing more broadly across many sectors and companies. On this week's agenda, we examine the daily chart action of the S&P 500. We look at three important breadth indicators that may reveal the true health of the U.S. stock markets. We examine the NYSE AD line, the new HighLow line, and the Bullish index. And finally, what does it mean? Our first chart is of the daily chart of the S&P 500. Now, we've had a pullback ever since peaking in late April. In fact, as it closed the trading on the 30th, the S&P is close to being down 6% from its highs. Now, what do we see with price action and the moving averages? One, we still see price below its 50-day moving average. Also, we can see that the 50-day line is beginning to crown. So we may see this quicker moving average slant down. But the key as of this 30th is that price has closed above its 200-day moving average. It did peak below it, but as of now has not closed below it. That is important. Let's see if the 200-day is the line support, or is it just resting before its next leg down. Now, looking below the chart of the daily MACD, we see momentum has been negative for a while now. We are getting close to a month worth of negative bars. That is not good. At some point, for the bleeding to stop, the S&P will need to turn those bars green again. The first breadth indicator we look at is the NYSE Advanced Decline line. Just as a refresher, technical traders look at this line as it shows us if stocks are advancing or declining. I will use the weekly charts to reduce the daily noise of this indicator. Now, what do we see? We see that the AD line, like the S&P price, has fallen since late April. Now, it has fallen below its short-term 10-week line. If we are using daily charts, we use this to represent the 50-day line. Now, that is a concern, but as of now, this is just a short-term pullback. In fact, the last time we were in a stage 1 rally attempt in 2016, it breached below this line before settling and beginning a new rise that resulted into a stage 2 rally. But the key will be, will it hold above its 40-week line? During that choppy 2016, not once did the AD line fall below its 40-week line. So for now, this is just a pullback according to the moving average. And yes, it may feel and get ugly, but this moving average will have to hold price above it. As we see in 2018, it did breach below its line in October, chopped around and finally stayed below it, and that resulted in a quick steep drop of the markets. Now, a big concern is the weekly MACD momentum indicator. It is close to change to its negative orange bar. But even if it does, it just may mean temporary pullbacks. If the MACD is negative with price below its 40-week line, then yes, there will be a major concern. The next market breadth indicator I would like to examine is the new HighLow line. Now, this is considered a leading indicator for technical analysts. It shows us the number of stocks making new 52-week highs. Now, unlike the AD line, this index has yet to cross over its 40-week line. That is not necessarily bad. Again, here we are tracking stocks that are getting past their old 52-week high. So even though stocks have been advancing, does not mean they have passed their old highs. But at some point, it would be good for this line to at least get above its 40-week line. And guess what? It may have hit an intermediate peak several weeks ago. So like the S&P and the AD line, it is in a pullback. Now short term, this is not bad news. After all, look at the surge since late December. Sometimes markets need a pause, and pauses sometimes means pullback. The key will be, eventually when it has another upward move, can it break above its 40-week line? Its MACD is still in green, and that is good news. So for now, we are just in a pullback based on this chart. Our final breath indicator is the NYSE Bullish Percentage Index. The Bullish Percentage Index is a breadth indicator based on the number of stocks on point and figure buy signals within an index. So anything above the 50 line would be considered bullish. So where are we? As of closing of the 30th, below the 50 line. That means this indicator signals a bearish outlook. Now, once again, just because it is below the 50 line does not mean a major drawdown, but it does explain the falling price action. The last time this index hit below the 50 line, you guessed it, it was in October of 2018. It did pop up and down a bit, but stayed below the 50 line before the big drop. So for now, we should be cautious with this reading, but as of now, it is just barely below the 50 line. Another key concern is that its MACD line has hit orange, which is negative. Now, once again, this shows weakness, so will be something to keep track of. Concerning signs, yes, but we are still in a pullback area. What does this mean? As of the close of business day on the 30th, the S&P has been weakened, but it has held its closing price above its long-term 200-day moving average. Can it hold? The breadth indicators may be able to tell us. And when we lump in all three breadth indicators, we see a pullback has begun. Now, will this pullback be short-lived like early January to February 2018? Or will this pullback test the lows of 2018? According to the AD line, we are just in a volatile pullback area. The key will be, can it hold its line above its 200-day moving average while the S&P price is above or near its 200-day line? If it can hold, then at a minimum, total market momentum can hold, and this becomes a volatile pullback in the middle of a stage 1 rally attempt. As I have said in several videos, stage 1s, even when they successfully graduate into a stage 2, can be volatile and choppy. Now let's see if the S&P can hold onto its stage 1 status. The next 2 weeks may tell us the true strength of the SP rally. Are we in the beginning stages of a stage 2 bull run, or the end of the beginning and a major drop may be in our future? The current evidence just shows a pullback. The key is to be cautious. Thank you for viewing my video. Please like and subscribe to my channel for future videos. Also follow me on Twitter at my handle HRSNYC.